Hi, I'm Patu from freefincal. So since October 2021, the market has not moved up at all. It's been going up and down. It's been on a sideways journey that is typical of what happens after a crash and recovery. There is a kind of a recession-like scenario. The inflation is high. There's neither any good news nor any bad news on a widespread level. So the market's not market's not crashing, or is it or is there a sustained bull run? But this is the best time for you to invest. This is probably the third time I'm making a video like this. Do not stop or redeem your equity investments during a sideways market. This is a fantastic time to invest, and you should not be stopping your investments or redeeming them. So if you look at the Sensex in log scale, so I have plotted the Sensex in logarithmic scale. So that's why it looks a little weird. In the log scale, what happens is that, so if you look at the movement here, let's say from 2 to 2.5, that 0.5 movement can be mapped anywhere else. The same 0.5 movement is the movement from 3 to 3.5 and from 3.5 to 4. So you can actually look at the percentage change of the Sensex uniformly across all time periods, because if you plot it in the normal scale, all these older features will get subdued because of the movement in the recent past. So if you want to look at everything in the same scale, and if you want to look at the Sensex movement as a percentage change, like in this case, it's like the 0.5% change, 0.5 in value change in steps. So that helps you understand how the Sensex has been moving, and you can see what I would like to call as the Sensex staircase. So you can see here the Sensex moves up, and then for an extended period, for several months to even years, the Sensex has been more or less flat, and then it moves up, and then there's a crash, recovery, flat, moves up, then up and down, up and down, up and down. This is our last decade, over 10 years, from 1992 to 2002, when the markets did nothing. And then you can see that it continues. That's our last decade, this whole period here. And then there was a great bull run prior to the 2008 crash, and then it crashed, and then there's a recovery, and then there's a sideways market. So you can see the pattern here, and this is what we are currently witnessing. So after this crash, there's a huge recovery and a bull run, probably because of the tech stocks or whatever you want to call it. It's just there was some kind of euphoria that things will be better, and then that euphoria has given way to reality, and now we have a kind of a recessionary period, high inflation period, high interest rates. So things are looking bleak in the short term for investors, and that's why the market's not moving up. But this is the time we punch in as much money as possible like a machine, and that's how our social station can change. That's how we propel ourselves to financial freedom. I want to show you graphs I have shown to readers or viewers several times before, but maybe somebody's new and they might be seeing it for the first time. So this is the gain or loss in my portfolio up to about mid of 2019. The green is the portfolio gain or loss. Of course, I've compared it with Nifty Next 50. Don't worry about that for the moment. I have subsequently updated it in my yearly audits and so on. That's not, the white line is not relevant, but if you look at the green line, that's my actual portfolio. And from the time I started investing in June 2008 to about let's say uh, almost up to December 2013, that's about 5 years or so, approximately, the gain in the portfolio was zero. But during this time, if you were to look at the year-on-year increase in my investment, so this yellow line is the year-on-year increase in my investment amount that I put in. So I've started from June, calculating from June 2010. So in June 2010 compared to 2009, the amount I invested was about 275% more. And then in the next year, it was about a little bit less than 250% more, and so on, and so on, and so on. So during this sideways market, I was dumping in as much money as possible into equity. Also at that time, my asset allocation and equity was very low. So that dump helped improve my asset allocation in the portfolio. And you can see what happens to the gain once the market picked up during the rally we witnessed since late 2013. And then that completely changed my life. It propelled me to financial independence. The battery in my camera is blinking, so this feed may cut off. I'm somehow managed to get my camera on, so it might freeze off. So that propelled me to financial independence, and that's a game changer. I am fully confident that those who are investing with a plan and with a clear asset allocation and de-risking strategy in mind, this is the best time for you to invest as much as possible. If as long as your goals are several years away, this is a great time for you to keep investing. Increase your equity asset allocation if it is much less than 50% or 60% as for goals 12 years, 15 years or so away. This is a great time to do it. Do not stop. It will change your life when the market picks up. The market will pick up, and sometime nobody knows when. Uh, uh, please don't stop investing. Please don't waste time timing the market, like put let me wait, hold it in cash, let me keep gunpowder dry, whatever they call, and whatever. Don't do all that. Just dump it in the market systematically like a machine. When the market picks up, it will your portfolio will pick up. So this is also in a way market timing. It's just that we are timing the market by being in the market. So that's one way to do it. So I'll catch you later. Bye bye.